One question we get asked all the time is, how do I go about getting a self-employed mortgage? And really, a self-employed mortgage is the same as any other, first of all. But what you need to do, in my opinion, is actually sit back and prepare. Lots of people I see turn up to the party a little bit too late and they think about the mortgage last, where really when you're self-employed, there's so many things that you have to consider that thinking about it early, 12, 24 months in advance, could help you a great deal. So I'm going to talk you through a few little things that you're going to need in order to be able to prepare, in order you're going to make it easier for you and less stressful, which could also have an impact on the amount that you could borrow, i.e. it could increase it for you. So to prepare and get yourself ready in advance, you're going to want to have company accounts. And that's going to be ideally produced by a qualified accountant. Also, in addition to that, you could have an SA302, which is a self-employed person's version of a P60. It just confirms your total earnings for the year. That could be obtained through the HMRC, or alternatively, if you use an accountant, directly from your accountant. Now, in relation to the SA302, that also comes with a tax year overview, which confirms the amount of tax that you've paid in that tax year. So please do get those documents ready. If you're employing your partner, a mortgage lender is going to want to see at least 3 months worth of pay slips. So if you were to employ your partner now, you're going to have to wait 3 months before you can apply for your mortgage. So please do factor that into your considerations and timescales. A mortgage lender is also going to want to see 3 months worth of bank statements. That's personal bank statements. That's going to be showing your income going in and your expenses going out. And the consideration with bank statements is your overdraft. If you're regularly using an overdraft, this could have an impact on your ability to get a mortgage. It could also limit the number of lenders that are available to you. So to improve your chances and make life a little bit easier and potentially give you the option of a better interest rate, minimize or completely avoid the use of overdrafts altogether. Next is going to be around your deposit. It could be possible to get a mortgage with a 5% deposit. However, if you would like to open up the whole of the market to you, i.e. more lenders, potentially an increased amount of mortgage, then aim for a 10% deposit, and that's 10% of the purchase price. Having your credit report, i.e. Nodal, Experian, Equifax, one of the credit reference agencies, in advance of when you want to apply or in advance of when you're going to speak to your mortgage advisor could be useful. The reason is because it confirms not only all your debts, the amounts, who they're with, when they started, when they're ending. It confirms potentially if you have any negative credit on the report, the dates and the amounts of those as well, which can help with the assessment process in recommending the right lender to you further down the line. The key thing as well is also making sure that you've got the right proof of address. And this is a bit of an annoying area for a lot of people because unfortunately with a mortgage, there aren't any lenders that we've found that allow you to use online statements. Now, if you're anything like me, everything I do is online. The gas, the water, the credit cards, the electric, the whole shebang. So the main ones you're going to need is either a credit card statement, a bank statement, or a utility bill dated within the last 3 months. Get in contact with the provider and get them to post it to you because we're going to need the original. The other thing you could potentially use is a council tax demand within the latest council tax year. Also, knowing your monthly budget. One of the things with mortgages now is it's all based on affordability. So itemizing exactly what you have going in and out of the account, in terms of direct debits and standing orders and bills and what you pay for. A few things I pay for, kids clubs, gym membership, holidays, itemizing that out literally makes your life easier at the point where you want to come to apply. And finally, applying for the mortgage in the right order. A lot of people I've seen this year have actually gone about speaking to an estate agent, putting an offer on a property before considering the amount of the mortgage. And then when we've come to assess the mortgage and look at all the documentation, they've not been able to borrow the required amount, or potentially they've failed the credit score with the relevant mortgage lender. So if you want to do things in a better order, speak to a mortgage advisor, get your mortgage assessed, get all the documents that I've mentioned, provide them to the mortgage advisor, obtain an agreement in principle, which is the credit check from the mortgage lender, which will be done by your mortgage advisor. And then at that point in time, go and place your offer on the property. So the big takeaway is, in order to get your self-employed mortgage, prepare, think in advance, set yourself up correctly, and if that's something you need assistance with, then please do get in contact.